Next up, we're going to hear from Fireweed Zinc and their CEO and director, Brandon McDonald. Brandon.
Thanks for having me again. I'm a little jet lagged. I woke up at 3 a.m. this morning, so if I pass out on stage, just someone please splash some water on me. This is Fireweed Zinc. We're, I guess, relatively new. We started trading last year in June. When I was here last year, we were actually still a private company about to IPO. So we've had some pretty exciting news in the last year, made some good progress, had some good appreciation in our share price, and we have some big news coming up, so I'll go through all of that. Let's jump around here. So just quickly cover the structure of the company. So like I said, we were an IPO last year. This wasn't a shell or an RTO or anything to that effect. We had a nice clean start on the company. Still pretty tight share structure, very few warrants other than broker, or no warrants other than broker warrants. Good shareholdings by management. Did a recent financing where Resource Capital Funds was the lead. So we raised $12.5 million on that in total in February. So we're well funded now and well poised for a good summer program. The asset itself, the company is built around a project called the Macmillan project. This is a zinc-lead-silver project in Canada's Yukon Territory, a very mining-friendly jurisdiction. The asset was originally found in 1951 by Hud Bay, whom we bought it off of recently. I finished that transaction just recently before our financing. So you can see a little hint of the resource down there, 11.2 million tons indicated at 9.6% zinc equivalent and 39.5 million tons inferred at 10% zinc equivalent. So this is a pretty substantial asset. The board of directors we've assembled here is pretty great. So the four founders are myself, John Robbins, ex of Kaminak, which he sold to Goldcorp for $500 million, George Grzinski and Richard Heidekevich, and then Dan Rogness and Adrian Rothwell rounding out our board. So as I discussed, our resource update, so this is what we put out in January. This caught the market a little bit by surprise. The historic resource that we were relying on from 2007 was about 30 million tons total, so this was a pretty substantial improvement. We're pretty happy with where we sit in the global peer chart of zinc resources. And you know, when you raise the cutoff, this resource still holds up pretty well. So you know, if you want to raise the NSR to 105 Canadian, you're still sitting at you know, over 30 million tons at 12.5% zinc equivalent. This is focused on, like I said, the two deposits, Tom West, or the Tom side has three main zones, Tom West, Tom East, and Tom Southeast. The two critical ones being Tom West and Tom East. Tom West is about half of everything, half of both Tom and Jason sits in Tom West. So that's a monster. And Tom East, although only about 2.5 million tons, grades 25% zinc equivalent. So when you have existing underground workings going into the Tom East zone and such a high grade, provides a real opportunity to front load your economics. The Jason side is Jason Main and Jason South. Jason Main interpreted as more vent distal style deposit, and Jason South more vent proximal in the vent complex. So Jason South characterized by high lead and silver grades, and Jason Main by lower lead and silver but high zinc. So you know, I said this deposit pretty substantial. This is where we sit amongst the biggest projects in the world. So every name you see on this chart here is a major substantial zinc deposit. The only junior also on this list is the Taylor deposit held by Arizona Mining with a $1.3 billion market cap. So the fact that even though we sit in the bottom, you know, the bottom corner of this, that we're on this chart at all of the world's most significant resources tells you the scale of the deposit we're working with. You know, like I said, none of the other deposits here are held by juniors other than Taylor. And what's incredibly appealing about the deposits is that as substantial as they are, they're not nearly sterilized. Tom West, again, like I said, about 25 million tons total. This is not closed in any direction except up because it comes to the surface. In all directions, it's still open. You see, for example, the one hole in the lower right there. That was a hole drilled by Kaminko when they had it under option in 1990. They hit 14 meters of 14% zinc. And never followed up on it. To them, it was they wanted to demonstrate a proof of concept that the deposit was open in that direction. Obviously, that was an emphatic proof of that concept. And so we see an opportunity to step this out, particularly to the south and the high grade areas there, and expand it, you know, with more high grade tons. The step-out drilling we want to do this year will really focus on proving up additional high-grade tons instead of just perhaps cynically adding tonnage with intent to move up the peer chart. We want to add tons that displace lower-grade tons earlier in the mine life. On the Jason side, you have the two main zones. You see the Jason Main on the right and Jason South on the left. These two are interpreted as opposite limbs of a syncline that's never been drilled off at the bottom. Now, the connecting hinge of that syncline would be quite deep and would be later in any mine life. But the fact that it's not been connected demonstrates that whatever mine life our upcoming PEA establishes, there's obviously opportunity to push it out further as you get down the line and drill from underground. And in Jason South there, you see some really incredible intersections there. 14 meters of 7% zinc, 5% lead, and 120 grams silver that is not within the resource. That is sitting outside the resource we stated. So that's an area for us to be able to do some infill drilling and add that to the resource. And in broader picture, these two main deposits, both Tom and Jason daylight. Tom was found because it was as simple as walking up the creek, spotting the boulders of massive sulfide, and then walking up the talus slope until you found the outcrop of the deposit. The rest of the very large land position we've assembled in this area now is going to require a slightly more scientific approach to find additional deposits. But what has us excited is that this style of deposit tends to exist in clusters, and what we see is some areas that are really show a union of not just geological prospectivity like the right horizon, but also existing geochemical signatures, be them silt or soil. So one of the things we want to try to do this year is firm up these exploration targets and test some of them and demonstrate that as large as this is and as much potential there is in the existing zone, that the land package is actually still fertile for more discovery. And amongst these zones, the end zone, which is within the Jason property area, but not within the Jason deposit, it's about 4 kilometers away. There was a hole from 1980 that intersected 3.5% zinc, 10% lead, and 80 grams silver. And that's outside the research. That's a whole zone that hasn't really been well understood and delineated. So we know that between the end zone and Tom and Jason, there's at least 3 SEDEX systems within the property area, and we think there's opportunity to find more. I'll skip that just to talk about, we have a PEA coming up. This is actually due very, very imminently. It was meant to be out by now, but as usual with engineering, it takes slightly longer than you expect. But this is, probably due now in early May. This is going to answer all the big outstanding questions on the project. What sort of scale we're looking at, what mine life, how much production, and in particular for this specific project, questions around infrastructure. We know that the last 200 kilometers of road to our project needs upgrading. So we have some cost numbers around that, which will be fully borne by the project, as well as give us some indication of what the OPEX will be with the distance to port, which is, it is a material distance to port. So it's going to be nice from our position to get these numbers out there and show that while there is a OPEX and CAPEX inflation from being in a infrastructurally challenged location, when you have a project this scale and grade, you can overcome that. You can overcome that and still make a lot of money. So we're pretty excited about getting that out. And I would note that, like I said, the PEA will bear the full cost of the road upgrades to our project. But if you look at, for example, the road to the casino project, Western Copper, who is here, the coffee project, which is now owned by Goldcorp, and the Yukon and federal government in Canada have recently in 2016 committed $350 million for these roads to resources, to upgrade roads to substantial resource projects. So we were kind of launched after 2016, after the announcement, but we've had very productive conversations with the government about them coming in to help with that road. And so just lastly, our valuation is pretty attractive compared to our peer group. So you look at the Zinc Explorer Developer peer table we've assembled here. We are the biggest amongst this list, one of the higher grade. But on an EV per pound of zinc equivalent in the ground, we are the cheapest among them. If this was if we had an average valuation amongst this list, I'd be pounding the table and saying this is not an average project. But the fact that we're cheapest demonstrates exactly how poorly the market understands us and exactly how much a PEA, if it does look robust, which I think it will, exactly how much that can shake the market up. And that's it. So PEA, like I said, is due soon, and we'll have a busy work program this summer. Thank you very much.